Okay, so welcome once again to Sunday Dazzly Market Watch. Once again, my name is A.A. James, the CEO and the founder of Dazzly FX. If this is your first time, you're very much welcome. Okay, so today we would be discussing the most profitable candle patterns. The most profitable candle patterns. In the next 10 minutes, I should be done with this particular training. All right, the most profitable candle patterns. So what are candle patterns? Especially Japanese candlesticks. They are the language of the market. The Japanese candlestick is the language of the market. The way you have charts in secondary school, the way you have charts in hospitals that are reading humans' heart movement. In the same way, you also have charts that are telling you about deep economic activity in the market. So this chart is just a representation. So now I'm telling you, these are my most profitable. You can have a lot of chart patterns. As a matter of fact, by corporate finance, I think there are over 50 chart patterns. All right. So, but I just use 4 patterns. And this guy here is called the bearish engulfing candle. All right. This is a bullish engulfing candle. This is a morning star, and this is an evening star. All right. So let me quickly write so that you can have a visual representation. This is bearish engulfing. Okay. Bearish engulfing. Okay. Is that big enough? Okay, nice. So this is bearish engulfing. Okay. Then we have this is kind of a bullish here. Okay. Bullish engulfing. Okay. Then we have here, this is a morning star. See, am I correct? Yeah, that's a morning star. Okay. And we have this one here being what? The evening star. Correct. The evening star. Ooh, sorry about that. Okay, so these are the 4 main candle patterns that I use personally. Okay. So now, bearish engulfing candle should be used when you want to sell. Bullish engulfing candle should be used when you want to buy. Morning star should be used when you are buying. And the evening star should be used when you are also selling. If you notice, this is a double pattern and this is a triple pattern. Personally, I do not use single patterns. Single patterns are the hammers. Okay, so you have, let's say you have something like this, then you have this guy here. So single patterns are hammers, hanging man, and all that. Those are single patterns. But I personally do not really use single pattern. If I'm going to use any single pattern, okay, I'm going to be using it with a volume candle. All right. I'm going to use it with a volume candle like this. This is how I'm going to use it. It has to be like this, then with another candle like this. This is what I'm going to do. Okay, so when I see these guys, I'm in the market. But I will not use any individual or any single pattern. No, I don't. I use double or triple. And there's a particular triple I don't use. I don't use 3 black crow or 3 white soldiers. No, I don't use that because the market has already gone. Okay. So now there is a confusion with a lot of traders. What is the confusion? This is the confusion. Let me show you what the confusion is. Look at this guy. Okay, so if this is the confusion, this is it here. So question, and you have this guy here. Good. Is this a bearish engulfing candle or not? Guys, what do you think? Is this a bearish engulfing candle or it is not? You can just drop in the chat box. Now, a lot of persons will be very confused. Why? Because they're wondering, okay, what is an engulfing candle? Okay, somebody says not. Now, somebody will say, it is, because this is, okay, now let's do something here. Let's put this guy here, okay? And let's take off this week. Let's bring this week to somewhere here like this. Okay, so now, is this an engulfing candle? Can we call this an engulfing setup? Really? We can call this an engulfing setup? All right. But look at something. Look at where this price is. How can you call this an engulfing setup when the price got to this point? And look at this. How did this guy engulf this guy? What is the definition of an engulfing candle? Body to body? Wow. Okay. Now, let me clear your doubts, everybody. Do you know that Forex was not the reason why candle patterns were originated? Forex was not the reason why candle patterns were originated. No, it's not Forex. The reason why candle patterns were originated was commodities. The person that originated candle patterns, in the person of Munehisa Homa, a Japanese rice trader. He was trading rice in the 1700s. All right. So he was the one who invented the candle pattern, the candlestick. Now, this is the original way to trade it. This is the original way. This is the traditional way. The candle must close. It will gap up first. Then it must close below. Mark those two words. Gap up, then close. The same thing with the bullish engulfing. There must be a gap down and a close. This is a practical bullish engulfing candle. And this is a traditional bearish engulfing candle. But the reason why you don't have gap up and gap down is because you are not trading commodity. You are trading Forex, currencies, and currencies don't close. Why do we even have gap down? Most of us do not know the meaning of gap down. Now, look at this now. Let's say this is price close at $5. $5, for example. And market will close by 5 p.m. US time. And market will open again. So this night, if market close in Nigerian time by 11 p.m., market will not open in the morning until what time? Until 1 p.m. So between 11 p.m. to 1 p.m., market is closed because it is stock exchange. It's not currency. As the market has closed, for those hours, transactions are still going on. By the time the market will open by 1 p.m., there must be a gap because the price at which the market closed is not going to be the same thing at which the price, it's not going to be the same thing as the price that the market opened. So you must have a gap. So that is why this is not a bearish engulfing, because a bearish engulfing, it has to gap up, open higher, then close below. Now, the same thing with the bullish engulfing candle. It has to open lower. It has to gap down and close above. The same thing with the morning star. Morning star, it has to gap down. But because we are trading currencies, currency is trading 24 hours. There is no closing time. That is why you don't have gaps. That's why you don't have gaps. But this is how it should be originally. Originally, this is how it should be. Let me show you, or let me tell you, one of the assets which you can see this is in oil, because oil is an energy, is a commodity. You can also find some of this in gold, but gold don't close too. Then when you get to stocks, you will definitely find it in stocks. Definitely. Let me show you something. This is rice. Now, let's go to daily. You're going to see something here now. Good. Are you seeing a lot of gaps, guys? Are you seeing a lot of gaps? You see? These, look at this now. This is a bullish engulfing candle. So now, because there are, now this is an evening star, guys, look at it. This is an evening star. Are you seeing it now? See evening star. So look at a lot of gaps. A lot of gaps. A lot of gaps happening. A lot of gaps happening. This is an inside bar. This is an evening star. You see it? You see? So now, the reason why you don't have it, now look at, this is a what? A morning star. Okay? This is a morning star. This is where this guy closed. But this one opened higher and closed here. But look at where the green started from. There was a gap up. There was a gap up. Market closed here, and you are opening in this place because this is a red candle. So market sold below. Guys, are you following? All right. So now this is a bearish engulfing candle, guys. Look at this. Gapped up and closed below. So if you don't understand the origin, now look at this. This is a morning star. How can this price close above and it's coming to open below and see closed above? This is a morning star. So the original candlestick pattern was designed to trade commodities. Was designed to trade commodities. Now look at a very huge gap here. This is the reason why a lot of persons are missing it. This is the reason why a lot of persons are missing it. Okay. But if you check gold, you may not have so much in gold. Let me check US oil. I think good. You have something close to, but US oil is also, look at this gap. So most of the time you will not have it. Okay. But the traditional way, this is an evening star here. But the traditional way, let's go to Euro USD, is that, ooh, wow, can I get this again? I don't think I can get this again. Okay, I think I can. Okay, good. So now, but this is the traditional way, all right? This is the traditional way to analyze the candle. So, but because we are using the candles for Forex currencies, so there's no gaps, all right? So now, even when we have something like this, we would still call it like what some of you are saying. You have this week which is longer, and some of you are saying this is what? This is still a bearish engulfing candle because this is a rejection. Okay. So, but the most important thing is that whichever form it takes, all right, just ensure that the entire body is bigger than the previous body. Okay. Now, for the evening star and the morning star, make sure that for the morning star, the candle closes above 50% of the first candle. It should close above anything like this. This is not an evening star. Sorry, this is not a morning star. It's supposed to close. It's supposed to close above it. All right. The same thing with this one. This guy here. This is the 50%. Market's supposed to close below it. Anything like this, this is not an evening star. No. Okay. Evening star market is supposed to close below 50%. All right. So guys, this are the most profitable candle patterns you can use. If you are trading price action, look for where you can have this. Where would you find them? Find them at your major zones. All right? Find them at major zones. Find them at, let me give you something today. Find them at major zones and rejection areas. All right? So that's that. Let me look for something. Okay. Let me clear everything out and let's look for something. Now look at this. Good. You see this? This guy, wicks above and below. Okay, so I would prefer things like this. Yes, though it's body to body, like I told you, it's currency, but I would prefer this if everything covers it. Okay, and what do you have? You have a move to the downside. All right, so look at this guy too. Look at this one also. You see it? Now, this is also a bearish engulfing candle, but it's not the traditional engulfing candle. It's not the traditional engulfing candle. You see it? So most times when you have an engulfing candle, you will definitely have a move. Ladies and gentlemen, look at this guy here. All right. You will definitely have move to the downside. Whenever you have an engulfing candle, you will definitely have a move to the downside. Look at this. Bearish engulfing candle, sorry. Bearish engulfing candle. Most of the time, you will have a move. Okay. Look at this one too. Look at this setup here. You definitely have a move. All right. So that's see this guy. And you want to find your bearish engulfing candle at the top of an uptrend. At the top of an uptrend. That's at the end of an uptrend, because sometimes you can see engulfing candle and it's not going to give you much. Look at this one. This is a bearish engulfing candle. Now, the name is derived from the location. The name is derived from the location. You cannot tell me this is an engulfing candle. No. Where is the location? It's not at the end yet. Okay? It's not at the end. For example, this is at the end. And this whole move started, all right, by a bearish engulfing candle. Okay? All right, guys. So that's just a little thing I want to show us today. And okay, look at this one. This is another one here. All right, we have another one here. This guy. Then we have this guy. Okay. So then when you're moving up, of course, look at it. Bullish engulfing candle. Some people can call this morning star also. Then what do you have? This is a bullish engulfing candle also. Okay. Then this can also be called a morning star. All right, guys. So this is just all about the little thing I want to show you concerning this is a bullish engulfing candle also. Bullish engulfing candle. Okay. So that is this is a bullish engulfing candle also. All right. By the time market is going to drop, it's dropping with the bearish engulfing candle. Dropping with the bearish engulfing candle. All right. Does that make sense? Good. So guys, what I'm going to do for you right now, or what I will tell you to do, is go to your chart and look for engulfing candles, or look for where market turned either to the upside or to the downside, and find the candle pattern that made the turn. Yes. Look for any chart. Scroll as far back as you can. As far back as you can. Find what made the market turn. See it. Anytime the market turn, you have what? Bearish engulfing candle. This was not a bearish engulfing candle. The market didn't go very far. Okay. Now, anytime you have a bearish, this is a 3 inside down. Anytime you have a turn, look at what is making the market to move. Check it out. Anytime you have a turn, what's making the market to move? What is making the market to move? That is going to be your assignment. Of course, it's not going to be 100%. Okay? It's not going to be 100%. But 80 to 85%, you are going to find those 4 candles there. Would I say I can guarantee you that? Not really, but that's reality. 80 to 85%, you are going to find those 4 candles in any reversal. In any reversal. Okay? So guys, that's all about the 4 most profitable candle patterns. Thank you.